Good evening. This is April 4th, 6:10 p.m., and we are currently looking at the US dollar index. All right, so right here on the screen, um, we can see price has done a lot. We've had a lot of recent movement over the past couple of weeks. Right now, we're getting prepared for tonight's NZD news for the official cash rate from the Bank of New Zealand, the Reserve Bank of New Zealand, and their rate statement. Looks like the current cash rate is 4.75, and we're expecting a 5 or 0.25 percent or 25 basis points increase up to 5%, which I think is the average right now, or what it is for the US dollar, the US interest rate. All right, so we're just going to take a quick look here at the news to see what's really going down. Weak economic data on Wall Street, recession fears. Markets get a jolt from the blue. So this is about the low, this morning's news about the job openings. We have a deficit of 1 million jobs when we were expecting 1049. So it was 1056. Now it's 9.93 million, and we were expecting 10.49. So quite a slide from what was expected. And we can see that reflected in the US dollar decline for today. So we just had a new, for those of you who don't know, the daily candles open up at 2 p.m. Eastern or Pacific Standard Time. So this was, even though it's technically like Tuesday on the charts, it's already Wednesday, April 5th. So this was yesterday's candle. We broke below this 102.024, which was a major area that we were highlighted, a major reversal area. So we've got a strong bearish candle close. And prices, we've only been open for about 4 hours, so prices finding some footing, seeing what it's going to do. It looks like we closed a gap that was here in price action. There is another gap that I see present here. Overall, I'm still bearish on the US dollar index, expecting price to drop down to about 101.100. And let's see. We were looking at the news. Buyouts cut 5,000 salary jobs. Excuse me. There's a bankruptcy on the news. Another bankruptcy. I think this is going to be a big one, guys. Who doesn't use baby powder? Or hasn't used baby powder? Or has had baby powder poured on them? I mean, that's a interesting thing. U.S. banking turmoil not over, sees long repercussions. So again, there's a lot of fear and uncertainty that's present in the market currently. 65% of Walmart stores are expected to be serviced by automation in the next 3 years. There's a crisis between China, Taiwan, and the U.S. Political strife. Overall disruption. More disruption. Okay, so I just wanted to take a quick look at some of the news that we have here. Hold on, wrong one. Let's see. So we can do this. So we're taking a look at the news to get a better understanding of the market sentiment, to get a better understanding of overall what other traders or market participants are thinking about in terms of the market, price action, and how they feel about the dollar or about certain stocks or cryptocurrencies, things of that nature. So it's always good to have a great idea of the market sentiment. It's one thing to know how you feel or what you see, but we often have the experience where you're having a conversation with someone or someone's talking to you, sharing something with you, and then there's like this aha moment where you have like an epiphany, or they enlighten you to some type of information that just overall broadens your spectrum, or broadens your horizons of understanding. Okay, so now we're on Associated Press. So we have more trade war concerns with the semiconductor computer chips. More discussion of a major bank failure. And speculation over the inflation fight. And there's this interesting thing that I was looking at. It's the Phillips curve theory. So, an economic theory that inflation and unemployment have a stable and inverse relationship. So, the theory that what caused me to look this up was that as inflation rises, unemployment, let's see. Yeah, so higher inflation is associated with lower unemployment and vice versa. So if we are winning a fight in inflation, then unemployment rates will go up. So if inflation is decreasing, that means there are a higher rate of unemployment, according to the Phillips curve theory. And I did look up what was stagflation. So persistent high inflation combined with high unemployment and stagnant demand in a country's economy. So this is when um, the exception to the rule of Phillips curve theory, that you can, in a period of stagflation, there is also high inflation as well as high employment and a stagnant demand in countries' economy. Okay. So I just researched that just to highlight kind of what people might be saying or thinking about when we're thinking about stakeholders and major market participants in the foreign currency market. So again, looking at the DXY, it's playing out kind of nice. I'd like for it to continue to respect, normal price action waves and theories. We don't want to see like a free-for-all kind of fall or rise or, anything like that. At least from a trading perspective, I'm huge on risk management, not really into chasing trades or predicting movements, but allowing for price action to unfold and tell me a story that I can relate to, and then I can find supporting evidence for by using fundamental analysis. So that's it for the DXY. Looking towards 101, 100, and then we will reassess what our position will be after that point. So about 50 pips. Up to the upside, 102 would be the next play zone that I'd be interested in, potentially even like 102.25. But that's it. Stay tuned for more.